Batman, Batman, Batman. Batman, Batman, Batman.
Now what you'll get in this video is firstly how to identify and draw your supply and demand levels using Forex volume, and specifically in this video is I'm going to show you the how and the where to identify and draw these supply and demand levels. I'm not going to be talking about the what, the why and the when, because if I do, I'll be on this video for hours and hours. This is something I can talk about for hours, but this is specific so that you can know exactly how to identify and draw these supply and demand levels. And to do that, I'm going to give you a four-step easy process of how to do so. Before we actually get into the four-step process, there's just a few things that I want to clear out of the way and make sure that you and I are on the same page regarding this whole process. Now, firstly, we're going to start with the analyzing part of the price action. Okay, now when we analyze price action, you don't want to analyze like an amateur. You want to analyze like a professional, and there's one key thing that you need to make sure that you are doing properly when analyzing price action. When you're analyzing the price action, you always want to analyze the most recent price action. And that is the key. You always want to analyze the most recent price action. Now, what do I mean by that? What I mean is, well, firstly, when we're looking at how price moves from left to right. It moves from the left-hand side of the price chart to the right-hand side of the price chart, as you can see in this example over here. Okay, you can see where price started, which was on the left, and ended up all the way on the right-hand side of the chart. And this is very simple. This is how price moves. Now, in terms of analyzing price action, like I said, if price moves from left to right, then it is obvious that the most recent price is found on the right-hand side of the price chart. Therefore, when I say that you need to analyze the most recent price action, what I mean here is you want to analyze from the right-hand side of the chart to the left-hand side. We analyze from right to left. Price moves from left to right, but when you analyze the most recent price action, which is from right to left, as you can see over here. You always want to analyze the most recent price action because, again, as a trader, you make money from what is happening now. Okay, you always want to look at what is currently happening right now in order to make the most recent relevant trading decision, which is again the most recent price action from right to left. And I'm stressing this out because this is key. If you do not do this properly, if you don't analyze from right to left, it doesn't matter what you learn from this video, you're always going to get it wrong. So always analyze from the right to the left hand side of the price chart, which is why when we identify and draw the supply and demand levels, we always identify and draw the most recent supply and demand levels. The most recent supply and demand levels, not the demand levels from 5 years ago. We're looking at the demand levels, the most current, the most recent ones. So when we identify and draw the supply and demand levels, when we draw the supply, we always want to identify and draw the most recent supply level. When we are looking at demand, we always want to identify and draw the most recent demand level. The supply level being the price level where price comes down or where price decreases, and the demand level where price increases or price goes up. So you always want to look at where's the most recent supply level, where's the most recent demand level, which level did price come off most recently, and obviously which level is price going to test most recently. And this is again based on the most recent supply and demand levels. And what you're going to be using to identify and draw the supply and demand levels is your Forex volume. This is the key. This is the key to show you exactly where the smart money is trading, exactly what levels the smart money is at. Because again, you want to trade with the banks, you want to trade with the major market movers, you want to trade with the smart money. And the Forex volume tells you exactly where that is. Now, specifically when we are looking at the Forex volume, to help us to identify the supply and demand level, what we are looking for specifically is we are looking for obvious high or obvious significant volume to help us to identify where the supply and demand price level is. We're looking for obvious significant high volumes. Okay, as you can see over here in this example, you can see this is a obvious high significant volume. Here's another obvious high significant volume, and here again obvious high significant volume. Okay, and this is specifically what you're looking for. It almost like it has to be obvious. If it's not obvious, then clearly it's not a significant volume that you can use to identify the supply and demand level. So obvious high, obvious significant volume to identify our supply and demand level. This is exactly what we're going to be using. It's very simple. It's very key, very simple. Like there's no two ways about it. High significant volumes. Now, how to insert the volume indicator on your price chart is very simple. You just simply click on insert indicators, you go to the volumes option, and then you click on volumes again, and you simply use the default settings. Okay, you can change the colors to whatever you want, but in terms of the numbers and the settings, it's the default volume that you find. Now, let's go into the 4-step process. Okay, this is the 4-step checklist that you always want to make sure you are following. Okay, this is a systematic step-by-step process for you to be able to identify and to draw the supply and demand levels. Very simple steps, but you need to follow them in the systematic process. What are the steps? And the steps are as follows. The first step when it comes to identifying and drawing your supply and demand levels is you want to start on the 4-hour time frame. You want to start on the 4-hour time frame. And then second step is you want to identify the most recent supply or demand level using the Forex volume, and you're going to be using a vertical line to help you to identify. Okay, we're first going to identify the level, the supply and demand level, using the volume. And then the third step is once we've identified the level, you go to the 15-minute time frame. And when you go to the 15-minute time frame, the next step you're going to now do is you're going to draw the actual supply and demand level using the Forex volume again, as I've explained previously. And this time we're going to be using the horizontal line to now draw the exact price level where this supply or the demand level is. So as you can see, very simple steps. Start on the 4-hour time frame, you identify the supply or the demand level on the 4-hour time frame using the Forex volume, and you're going to be using the vertical line to help you. And then you go down to the 15-minute time frame, and in this time frame, this is where you're actually going to draw the price level, the supply and demand level, again using the support of the Forex volume, and you'll be using a horizontal line so that you can clearly draw this on the chart and you can see exactly where the price level is. Now, obviously, it's easier said than done. So what we're going to do now is we're actually going to go over to the actual charts, and I will show you this 4-step process, okay, with a couple of examples so you understand exactly what I'm talking about. But these are the 4 steps that you need to follow. So let's crack into the charts. In this example, we are looking at USD CHF, dollar Swiss, and we're going to follow the 4-step process of how to identify and draw our supply and demand levels using the Forex volume. So I'm going to start with the supply level. So step number 1 for the supply level is to make sure that you are on the 4-hour time frame. As you can see, we are on the 4-hour time frame. So step number 1 is checked. Step number 2 is we now want to identify the supply level using the Forex volume. Now again, when we are identifying the supply level, we are looking at the most recent supply level, and we're going to be using the high Forex volume to identify it. And specifically what we're looking for is obvious high volume. Okay, so going from right to left, looking at the obvious high volume, okay, from right to left, the obvious high volume, most recent one is this one over here. So again, we're going to be using the vertical line to identify. So click on the vertical line, and we're going to place this vertical line, okay, where the high volume is, the obvious high volume, okay. To help us, this vertical line is going to help us to identify the candle, okay, with the high volume. So that's step number 2. We've identified the supply level, okay, as you can see, the level where price went down or price decreased. That's step number 2 checked. Now step number 3 is we're going to go to the 15-minute time frame. So that's what you're going to do now. We go down to the 15-minute time frame, and what we're going to do is we're going to go to where that vertical line is. Okay, that's the 3rd step ticked. And now what we're going to do is go to step number 4. And now what we're going to do is we're going to draw the actual supply level again on the 15-minute time frame using the volume to do so. So again, when we're looking at the volume, what we are looking for is the obvious high volume. And as you can see, now what we do is we take this vertical line, and now we take it and we move it to where the obvious high volume is to identify exactly which candle, okay, this high volume is for. So as you can see, it's clearly representing this candle. Now what we do to draw the supply level is we're going to be using the horizontal line, and what we're going to do is we're going to draw the horizontal line, place the horizontal line on the opening price of the candle with the high volume. This is key. I'm going to repeat it again. We're going to put the horizontal line on the opening price of the candle with the high volume. So now that we know which candle has the high volume, we place the horizontal line on the opening price of that candle to draw and identify the actual supply level. So very simple. Now we've placed it on the opening price of the candle. If we go back to the 4-hour time frame, now we can clearly see the supply level. Okay. Now the next step is to actually identify and draw the demand level. Now that we have the supply level, and we're going to be following the same 4-step process. So step number 1 is to make sure that you're on the 4-hour time frame, which we are on right now. Step number 2 is to identify the demand level. So now we're going to look for the level where price went up or price increased, okay, based on what is currently happening right now. And again, what we're going to be using is the Forex volume to help us to identify. So again, we're looking for a demand level, which is where either where the price is or somewhere below. But again, we're looking for the most recent demand level. So from right to left. So from right to left, we are looking for the level. Again, we're going to be using the Forex volume. And what we're looking for is for obvious high significant volume. And step number 2 is to then identify this level using the vertical line. So there's the high volume, using the vertical line to identify the candle. So that's step number 2 checked. And then step number 3 is to now do what? Step number 3 is to go to the 15-minute time frame. So we're going to go to the 15-minute time frame, and we're going to go to where that vertical line is, which is right over there. Very simple. Let me zoom in over there so it's much more clearer. And then step number 4 is to now actually draw the demand level. And what we're going to be using is the Forex volume again to identify and to draw. So again, we take our vertical line, and now we need to look at where's the significant obvious high volume, and clearly, as you can see, it's right over there. So boom, we move the horizontal line to that candle so we can clearly identify which candle it is. And then we then use our horizontal line, and as I said, you draw the horizontal line on the opening price of the candle with the high volume. So we already know which candle has the high volume with the assistance of the vertical line, and simply place the horizontal line on the opening price of the candle with the high volume, and this is on the 15-minute time frame. So step number 4 is checked. Now when we go back to the 4-hour time frame, we can clearly identify, and we've already identified and clearly have drawn our supply and our demand level. Very, very simple. Now let's go into the next example. Now we're looking at USD JPY, and we'll start again with the supply level. So step number 1, make sure you're on the 4-hour time frame, which is checked. Step number 2 is to identify the supply level using the Forex volume. And again, we're identifying the most recent supply level using the Forex volume. And what we're looking for is obvious, significant, high volume. So if we go from right to left, we're looking for the most significant, high, obvious volume, which is right over there. And then we simply place our vertical line again, which is step number 2, to identify the candle with the high volume. So step number 2 is checked. Now we need to go to step number 3, which is go to the 15-minute time frame. And on the 15-minute time frame, we are now going to draw the supply and demand, the supply level, okay, using the Forex volume again. And as you can see, we're looking for significant, obvious high volume, which is right over there. And we're drawing the horizontal line on the opening price of the candle with the high volume. So as you can see, this is the candle with the high volume. We place the horizontal line, we draw the horizontal line on the opening price of the candle with the high volume. So there we go. For our time frame, there we have our supply level. Demand level, the same 4-step process. Step number 1, start on the 4-hour time frame. Step number 2, identify the demand level using the Forex volume. The demand level being the most recent demand level from right to left. And we're going to be looking at the demand level, or we're going to be using the Forex volume, obvious high significant volume, to identify. So again, going from right to left, we're looking for the demand level where price went up, and we're using the Forex volume again, obvious significant high volume, boom, right over there to draw it. And then step number 3, go to the 15 minutes time frame, and again on the 15-minute time frame we are now going to be drawing the demand level. And what are we looking for? Again, we are looking for obvious high significant volume. Okay, we're looking for the candle with the high volume, which is right over there. Okay, and what we're going to be doing is right over there, my apologies. And what we're going to do is we're going to draw the horizontal line on the opening price of the candle that has the high volume, which is this candle over there. Okay, so we're using the vertical line to identify the candle, and then we're using the horizontal line to actually draw the demand level. So boom, there it is, 15-minute time frame. Now if we go back to the 4-hour time frame, we can clearly see our supply level as well as the demand level using the Forex volume to draw it. Let's go into the next example. Now we're looking at Euro NZD. I will start with the supply level again, the same 4-step process. Step number 1, check you on the 4-hour time frame. Step number 2, identify the supply level using the Forex volume. Supply level being the most recent supply level, and the volume being the obvious significant high volume. So from right to left, okay, significant obvious high volume right over there, and we're going to put it on the candle with that high volume, okay, to identify the supply level. So this is the, as we can see, where price went down, which is the supply level. So we place our vertical line over there. That's step number 2 checked. Step number 3 is to go to the 15 minutes time frame. Okay, and on the 15-minute time frame, next step we're going to do is we're going to actually draw the supply level using the Forex volume. Again, we're looking for obvious significant high volume, which is clear to us right over there, and we place the horizontal line on the opening price of the candle that caused the high volume. Very simple. So there's our supply level. Now again, the demand level, the same 4-step process. We start again. We start on the 4-hour time frame. Step number 1, check. Step number 2 is we identify the demand level using the Forex volume. Again, we identify the most recent demand level, and we're using the Forex volume. We're looking for obvious high significant volumes to do that. So going from right to left, we're looking for obvious significant volume, okay, to help us to identify the demand level where price went up or price increased. Again, obvious high volume right over there. Okay, obvious high volume. Now, just a side note, we're not going to use this high volume over here because we're looking for a demand level. As you can see, price went down here. We're looking for a level where price went up because we're looking for demand. Okay, that's just a quick side note. So step number 2, we've identified the demand level using the vertical line. And now step number 3 is to go to the 15-minute time frame. And we're going to go back to that vertical line. Okay, there it is. And what we're going to look for now is, again, we're going to be looking for obvious high volume to help us to identify the demand level. So obvious high volume, and we're going to place the horizontal line on opening price of the candle with the high volume, which is this one over there. So there's the demand level, nice and easy. Okay, nice and easy. So boom, there we go. We've got supply, we've got demand using the high volume to do so. Now what I want you to do is I actually want you to comment below what's the one new thing you learned from this video. What is the key takeaway that you've taken from this video? Comment it below so you can bring awareness for yourself to this. And also, if you have any questions, feel free to leave a comment. Okay, leave a comment below for any question you have. I respond to all comments, or you can simply send me a DM on Instagram for any questions you have regarding this video. I respond to all questions. That is the 4-step process of how you identify and you draw your supply and demand level using the Forex volume. I'll see you in the next one. I'm out.
Batman, Batman, Batman.